Hi guys, thanks for tuning in to another episode of Nuggets News. Today I'm pretty excited to have JP Thor back on for the third or fourth time. Thorchain's been doing some amazing work. It's been 3 years nearly to the day since we had you guys on, so welcome back, JP.
Thanks, Alex. It's good to touch base after 3 years. Lots happened in that 3 years.
Sure has. So for people at home that aren't familiar with Thorchain, or maybe even your background, do you want to give us the quick rundown of sort of how you got into tech and building and crypto?
Yeah, sure. So I was originally in the Air Force for 12 years, and I went to a tech startup meeting in Sydney, Newcastle at the time, back in 2013. And the guy there was pitching a Bitcoin exchange. This is August 2013. I think Bitcoin was 100, $150. And I went home that night. I was like, what the heck's Bitcoin? Checked it out, read the white paper, and I'm like, this is going to change the world. So I bought a stack and then I went on that crazy run from like $200 to $1,000. And about November that year, I was emailing all my family and friends going, you've got to get onto this. You got to buy Bitcoin. And yeah, and then it's just been a process of discovery since then and working it all out. In 2016, I resigned from the Air Force and went full-time crypto. And just originally, I knew I wanted to get into it. I knew I wanted to build. I knew I wanted to build something big. Took about a year of launching projects, trying to understand the problems facing the industry. And I kind of walked away from that year thinking the biggest problem to solve was decentralized liquidity. And this was like, yeah, early 2018, January 2018. Bancor had released their protocol, but I was really disappointed in the implementation of Bancor. And I thought, hey, let's try and do better. And as well, it has to be cross-chain, so Bitcoin ETH. And yeah, so I launched, basically sat down, wrote a white paper, try to figure it out. Launched it. It was a bit of stop-start. Launched it a couple of times, stopped, started again, switched dev team, switched funding, blah, blah, blah. Until finally I met the right people to build it in 2019. And then that's it. That's where ThoughtChain is today. Quick summary.
Yeah, here we are. I like it. So hopefully, a lot of people at home have used this before, but as JP just outlined, a decentralized way to swap your Bitcoin to Ethereum or another chain rather than going on that exchange. We all know about the problems about exchanges getting hacked or freezing and getting harder and harder to get funds in and out of exchanges. So a decentralized way with your own hardware wallet or your own Web3 MetaMask and the different wallets we have now to swap one asset to another is the big problem we're trying to solve. So, what's other from I guess the very starting point? What's been happening the past 3 years? What are the next things you're looking forward to? And dive into all that for us.
Wow. So the last 3 years. So I think we're just launched multi-chain ChaosNet. So it had just gotten out into the wild. We've transitioned from a single chain ChaosNet to a multi-chain ChaosNet. So what I mean by that was in 2020, so 2019, the project kicked off and had it rebuilt as testnet. 2020, we deployed a real live net with real funds, but it was just to a single chain. It was Binance chain. So you could swap about 20 token, about two tokens,
Yeah.
but it was single chain. So then we relaunched the protocol across, I think, about five chains at the time: Bitcoin, ETH, various other ones, and we called it our multi-chain chaos net. So we didn't know all the problems we are going to face, but we knew we had to get it out there. That's why I deliberately called it a chaos net, as in just expect chaos. So we told users, look, anything go wrong here, we don't know what's going to happen. We just have to get it out there and just see if it works and see what the universe throws at it. And yeah, so we just launched it. Everyone was super excited. The bull market was in full swing. Price, it was really illiquid. So it 12 months prior to launch on Binance, but there wasn't much liquidity on Binance. There wasn't much liquidity on the network. So the thing just screamed up to ridiculous prices, like $20. It should never have gone that high. And then, so it's just wild. In July that year, the protocol suffered three kind of major or two major security incidents just around one specific part of the protocol, which is the Ethereum router, which was in place just so the protocol could handle ERC20 tokens. And we had debated whether we were going to do ERC20 tokens. So we had to deploy a router, and it was just that damn router that caused the issues, just a single piece in a giant puzzle.
Mm.
So the protocol had to get taken offline for 3 months, very early days. The team and the devs added all these safety features around it to give node operators and the whole protocol the means to defend from attacks. Since then, the protocol hasn't had any issues. Touch wood. They've got multiple layers of security around the system that have proven to work. In the end, a sense that like a bug bounty program that has paid out multiple bounties, node pause ability, outbound throttling, Dex whitelist, blah, blah, blah. So there's like 4 or 5 major security layers that have been tested live in the last 2.5 years. So we're super glad they're in place. But rolling out more change, rolling out more features, streaming swaps, lending, savers, protocol and liquidity. The team have just been flat out the last 3 years, adding all these features, adding all these chains and integration. So the protocol is integrated across a variety of the major wallets, and the major wallets are integrating, fingers crossed, this year. So this protocol is going to be everywhere soon. So coming in now into 2024, very strong position. The funny thing, Alex, is like looking at the price wise, it's like very similar price to what it was 3 years ago because it was started that crazy bull run.
Yes.
But the metrics are 100 times better. 100 times the users, 100 times the volume, 100 times the TVL. It's wild. So while 3 years ago it was fueled by speculation and crazy markets, today it's literally the fundamental value of the network is driving it, and super excited to see where we're going in the next few years.
Yeah, and full disclosure, that's why I still own some Rune, guys, the Thorchain token. So I guess the other thing I'm interested to pick your brain about is the Bitcoin DeFi. So we've been interviewing a lot of projects and doing write-ups on this for the past 2 years now, and a lot of these are EVM compatible and trying different technologies and side chains to scale Bitcoin. But what does that, I guess, kind of mean for Thorchain, and what are you seeing in how this Bitcoin and Ethereum and Layer 2 world sort of developing? What direction do you see it all going in?
Yeah, it's funny how the narratives constantly churn around. So since 2013, it's just been narrative after narrative after narrative. And you can chase the narratives. There's a lot of hard work, or you can just be consistent. So the most consistent message or narrative is just literally multi-chain liquidity, which is where Thorchain has firmly planted its flag. Whereas it literally provides liquidity for a multi-chain world. And it's really easy to arrive at a position that reinforces that thesis that the world will be multi-chain. So Bitcoin is the alpha of money. It provides a monetary asset that stores value across time and space, way better than any other options. So it will always be the alpha of money, and it will always accumulate monetary premium. That is a known thing, and it's got a really strong linear effect, and it will be around for forever. So, and that position will never be challenged. And because it's based on proof of work, it's based on the delta change of entropy. And so it'll be the largest proof of work chain, and it will be the only chain that can actually retain a monetary premium as a proxy for global economic output. Now, that is 100% Bitcoin. It will be the alpha forever. But the next kind of compelling thesis you could have is that the financial application of the world is going to get rebuilt on decentralized and distributed open source or openly validated ledgers. So like complex financial instruments, games, anything involves the transmission of money between users is way better for it to be deployed on an open network than a closed one. So legacy world, we just deal with these closed source databases for anything. And so Ethereum plays in the space of being a protocol for financial applications. But Ethereum, the asset, in my opinion, is chasing too many narratives for the ETH asset to accumulate monetary premium on the basis that it is money. It will accumulate monetary premium because it does useful things and people will pay to use it. But however, Ethereum has definitely, and by the way, this has changed many times, it has definitely moved towards a modular thesis itself. That the idea is that you can have these like modular layers around it and different implementations of clients. And, we've got like 6 or 7 L2s, like Optimism, Arbitrum, Blast, Coinbase, Binance Smart Chain, blah, blah, blah. The list goes on. So it's very modular, which is good and bad. Then you got Solana, which is this kind of monolithic direction, which is saying, hey, let's just max out everything from the node point of view and just see how much we can, what kind of bandwidth we can actually achieve if we just max everything out. So that's Solana. So there's two different theses there, the monolithic thesis, Solana, and the modular thesis with Ethereum. We don't actually know which one's going to win. And by the way, both those applications are chasing the idea of being the financial application. So they've got to have a lot of devs doing a lot of things all the time, right? Whereas Bitcoin, it's just like, don't change. So you just need like a couple of really good developers that just ensure the protocol never changes. So because of that, right there and then you've got three chains, right, that are going to be around for a long time.
Yeah.
And there you go. So as a result, you need a protocol to allow you to move value between those three chains, hence Thorchain.
Yeah.
So yeah.
And for users at home, I guess we're trying to make that user experience easier every cycle. It's still difficult for people that are trying to install MetaMask, or now I've got to use Rainbow Wallet and whatnot. So we're hoping, and Thorchain and everyone is hoping that we're getting better and better so that people can go from their Bitcoin to maybe a Bitcoin-backed stablecoin or on Ethereum or Solana or whatever, all with one or two clicks of their wallet. What are your thoughts about onboarding users and making that really friendly so they don't know what's going on under the hood?
100%. When I first jumped in 2013, the Apple App Store were banning Bitcoin wallets. So you couldn't even download an app on your phone to hold Bitcoin. I remember I was downloading these crazy web wallets and stuff like that and compiling from source, as well. Anyway, and then in 2016 and 17, we started seeing the first advent of mobile wallets. I think at the time we were mostly using like MyEther wallet which became like MyCrypto. So it's not this web kind of experience, which is insecure, and we plug in around with key store files and other crazy stuff like that. In 2017, I jumped in the Trust Wallet Telegram channel. I think it was August. There was only like 15 people in there, and met the founder of Trust Wallet, Victor, and supported him ever since then, and was part of the story of Trust Wallet emerging to where it is today. And Trust Wallet just absolutely nailed the mobile experience. In my opinion, it's the oldest and it's the best. It's the largest mobile wallet, mobile experience, and it's kept up to date with all the modern UX. However, we're still, and it just keeps getting better and better. I'm working with the team right now building a TSS-based like crypto vault. So the biggest issue is I recognize is single signatures. So if you create a wallet whether it's hardware, mobile, desktop, doesn't matter, MetaMask, with a single signature, you should live in fear that one day that single key is going to get leaked, compromised, phished, attacked, lost, right? Which is what, and I've had plenty of family and friends lose money through that vector. So you should be extremely nervous with having a single signature key. Now, Thorchain is threshold signatures. So it's got 100 nodes all coordinated together on these kind of threshold vaults. And threshold signatures are honestly the next evolution in cryptography. It allows these multiple parties to come together to create a vault which has no private key. And the vault shares, so the devices that create the vault, don't have any funds in them. Then there's no linkage between them and the vault itself. The vault can work on all the chains all the time. And it's a major breakthrough. And in fact, you asked, but I am working with a team right now to build, it's called Vaultix. Basically, it uses the Thorchain TSS protocol in a retail app. So you can, I'm just pulling it up here, you can create these vaults. It supports all the chains. So Bitcoin, ETH, Solana, Thorchain, Optimus, everything's in there. So like ECDSA and EDDSA. But most importantly, it requires multiple devices to connect to each other. So like two-factor. So you can like create a transaction on your MacBook and nothing's happening until you pull out your iPhone or your second device or your third device, connect it via a pairing session, and 10 seconds later sign a transaction. So if you lose access to a single vault share, one, you're not losing any money. Two, you're not losing access to funds. So anyway, give me a few more months to get this user experience sorted, and hopefully we get to see. And this is going to open source, and I hope everyone forks it and copies it and integrates it, because this is going to solve a major problem with self-custody. That is, it's not single signature. It allows, it's far safer, and the user experience is far better.
Yeah, fantastic. We'll have to revisit that one in a few months. Any other thoughts on any sectors in the crypto space, mate, or where we're going and what sort of stage we're at in the cycle, or anything like that you want us to speculate on a little bit?
Speculation. Yeah, so I think we're mid-cycle, and if you just look at the many different, I mean, you look at the rainbow chart, you look at stock flow, you could look at the realized profit charts. Anything will point to you that we're actually just mid-cycle. So mid-cycle means the bottom of the bear market was 12, 18 months ago, and the top of the bull market is 12 to 18 months in the future. So that's kind of indicating to me, and you're agreeing, seems that you're agreeing there,
Yeah.
that Q3 next year is going to be the top. So I personally think we're going to 2x this year, so 60 grand, 120 grand. And then next year we'll do another 2x. I'm talking Bitcoin here. So 120 to 240. So we're just mid-cycle. It's the perfect time to enter with conviction and hold for at least 12 months to get you a couple of gains discount there.
Yeah.
The reason why we had a big run up this year is all the momentum behind the ETFs. We had all that pent up demand being pumped straight into Bitcoin, causing us to move quite into new territory, like all-time high prior to halving is new territory. So I think we overextended and we're going through like a cool down phase. May, June, July should be nice months to be involved.
Yes.
By the way, people ask, will we ever see a super cycle? In my opinion, Bitcoin is just only getting more volatile. The reason why it's getting more volatile is more of it's being pulled off markets and put in cold storage. So I think volatility is not going to slow down, and we'll still see blow off tops and big ups and downs. In fact, we're more likely to see that the more the more volatile between like market-based Bitcoin to like total supply of Bitcoin. So mid-cycle, more volatility is downrange, great time to enter. And in terms of like other sectors I'm keeping an eye on, I'm keeping an eye on like decentralized financial networks, physical networks, DePIN. I'm also keeping an eye on like decentralized artificial intelligence networks. It's still going to be a while before we see any of those protocols make meaningful impact or headway, maybe like 4 to 5 years. I do believe that AI definitely should be distributed and decentralized. Certainly not closed source, so minimum open source and ideally distributed. But there's a lot of hardcore problems to solve there, so I'm just biding my time. So that's the main ones. Just keep an eye on. But I mean, what's coming down around for ThorChain? So the next few months, the focus is on stability, shedding some more liability around the protocol, stabilizing it, and launching a new feature called Rune Pool. So basically, if you have Rune and you just want to get Rune on Rune yield, you can just deploy it into this module, into the protocol, and then the protocol will handle that for you. It will deploy your Rune across all the liquidity pools all at the same time. So instead of deploying in a single pool and tracking like that Rune versus a single pool asset impermanent loss, you just basically get aggregate IL across all the pools at all the same time. Yeah. Aggregate IL will always be less than isolated IL in a single pool. So instead of, call it the noisy minority problem, instead of one person every day experiencing peak IL and being extremely, max pain, everyone experiences the same IL but far lower. So there's no max pain problem. Everyone is just in, it's like, a boiling frog problem. Yeah. And also, because it's in all the pools all at the same time, you're basically earning like the highly volatile high yield pools, which normally would get peak IL on the volatility. They're actually earning the most yield. So that yield comes back to this kind of global module. Anyway, so super excited about that. It should hopefully address all the user experience problems because it's just like one click deploy. Yeah. And it should address the main issue, which is IL, because you're getting aggregate IL, not isolated IL. So there you go there. What do you think?
I like it. I was going to say, for people at home, impermanent loss, when you have your funds in a pool and the volatility in the price changes causes, I guess, slippage or loss, or what's the but most basic explanation for people that aren't familiar with impermanent loss?
Yeah, so impermanent loss is if you provide liquidity dual-sided in a pool, so like, ETH, USDC, as the Ethereum price changes, let's just say Ethereum goes to infinity, also let's just say Ethereum goes to zero, then your LP position will also go to zero in total because half it's ETH and half it's USDC. So you can see straight away there that if you just held ETH and USDC outside the pool, let's say $100 USDC and $100 ETH, you'll always have you'll always have $100 of USDC, and the ETH would go to zero, but you still have $100 worth of USDC and $0 worth of ETH. But if you're in the pool, you started with $100 of ETH and $100 of USDC, but the whole ETH goes to zero. And what that causes is arbitrage moves the USDC out. So your LP position is basically zero.
Yes.
So the loss then is 100%, as in like you lose everything.
Yeah.
Whereas if you had held it, you'd still have $100. So, but remember, if the price comes back, boom, you're back to $200 again because it's impermanent. So, impermanent loss is a characteristic of providing liquidity on both sides of the market, where as the market moves, you essentially get less of the original price you just held. So it is just a kind of symptom of the markets, and it's a hard problem to solve for sure, but it's a user experience problem. It's a messaging problem.
I like it. One thing I would, I guess, push back with a different thesis. You said that because we have the illiquidity of so many Bitcoins going off chain or off exchange or whatnot, we can still get blow off tops and volatile price movements. I think one of the things I've been thinking more about now as we get into a multi-trillion-dollar market cap and we're a mature asset now on Wall Street and whatnot, is that the funds and the ETFs are having so many inflows that they're going to have more and more of an influence as these funds rebalance. So if their clients have got 3%, Bitcoin doubles, they're going to rebalance. So I'm hoping that can kind of smooth out some of that volatility, and that we might be to the point now where we become like the US stock market, where as long as it's basically just tracked money printing and inflation, and so it can just grind higher for the next 10 years, 15 years, whatever, in a kind of bull market. And maybe we have 30% pullbacks along the way. But I think that could be another Max Payne scenario where a lot of people are looking for 70% drawdown every 4 years, and so they might sell, and then we just kind of grind higher and drift higher. So I don't know. Any thoughts on that?
Look, you are correct that the deposit and withdrawal out of the ETFs, while it's not actively on the markets like you'd be buying and selling on Binance, but by settling in, selling back out again, it actually provides liquidity to the asset. So you are correct there. And the ETF holders are typically think on longer time frames than your Binance traders. A Binance trader might be in out over like 2 weeks, or they buy and then panic sell.
Yep.
Whereas an ETF holder will probably think in terms of like months to years, that they make an acquisition now and then they might sell it in 2 years' time. So things slow down, and so I'll be interested to see. I also agree that the effect of halving is going to diminish, because at some point the daily fees of Bitcoin are going to exceed the halvings. So the effect that the drop in the daily emission of Bitcoin has on the liquidity basically goes to zero. It's not going to happen this cycle. It's still substantial this cycle, like 3 Bitcoin versus 1 Bitcoin per block. It's probably going to start happening in the next cycle, and I think definitely next cycle after that. So 2029 into that cycle, I think we may not see crazy drawdowns. It'll be quite a mature asset, for sure. Now, the thing is, like, what's the thesis? I've been around Bitcoin since like $100, and then even back then I had a thesis that it would go to $100 million over 10 years ago. I was out by a few years because I was calling $1 million this cycle. But anyway, but everyone should have a thesis of how Bitcoin's going to get to $1 million and beyond. And I can present it to you quite easily. So Bitcoin demonetizing gold, and Bitcoin is a better gold at gold, right? And let me just quantify that. So people have been using gold for thousands of years because of it is a globally distributed asset that nobody can print out of zero. Nobody can artificially create it. Right, it was deposited here by exploding stars billions of years ago. You have to dig it out of the ground, expend effort, or you have to buy it on the open market, so it has unforgeable costliness, and it's quite hard to get at. And the current inflation rate of gold is like 2%. So it has this kind of strict scarcity. It's not absolute scarcity, but it's got a strictly scarce, unforgeable, costly asset. So it attracts a lot of monetary premium. However, although it's really good at storing value across time, and by the way, value is just your finite time multiplied by your finite effort. You convert that into an instrument that can preserve those finite characteristics. So that instrument should also be finite. That's gold. But then gold sucks at storing value across space, which is the other characteristic of money that's required. So, for example, you might expend your time and effort in Tasmania and fly to Paris and buy a croissant. There you go, using like USD or euros. There you go. So paper money is really good at storing value across space. It sucks at storing value across time. Gold is terrible at storing value across space because you got to lug it around, you got to carry it, it can be seized off you can't really shave it off, blah, blah, blah. So Bitcoin does both. It's really good at storing value across time and space. Now, because gold sucks at being a money, it's going to get demonetized by Bitcoin, which is superior. So Bitcoin has absolute scarcity, and it will absorb on the monetary premium of gold. So there you go, right there. That's $1 million Bitcoin. Gold's 14 trillion. If Bitcoin just 10x's from its current position to demonetize gold, then boom, there's your $1 million Bitcoin. Now it's not going to stop at that. It was going to demonetize every asset in the world that is holding monetary premium. So property holds monetary premium. Property is going to go to zero as we adopt technologies and the supply demand curve. Of, eventually we'll have the technology to live anywhere in the world, including in space, and everything will be habitable. And we'll have robots be able to build as houses, all these kind of livable spaces as fast as you want, and the energy to power those robots will go to zero. And as well, you may choose a house based on a lifestyle decision or a location. Well, that's becoming irrelevant because you'll be able to put it on your Apple Vision Pro and walk around and have any house anywhere you want, any time. So augmented or virtual reality is going to like zero out all the cool locations. We'll be able to live in the universe, and the energy cost to produce these houses will go to zero. So there you go. Property's going to go to zero. And I wouldn't be holding property as a long-term wealth asset, that's for sure. So Bitcoin's going to demonetize the monetary premium out of property. Boom, there's a $100 trillion Bitcoin. That's your next 10x. So there's your $10 million Bitcoin.
Yeah.
And finally, where's your dollar sat? So one Bitcoin, 100 million sats. When are we going to see Bitcoin equal $100 million of today's currency? Well, it needs to go to quadrillion. So what does it need to demonetize to get to quadrillion? Money itself. And all the world's fiat currencies are completely mismanaged compared to Bitcoin. So there's going to be this slow process of monetary premium leaving these paper currencies into this hardcore currency, which is Bitcoin, over the course of the next 20, 30 years. And we're going to start with the small sovereigns like El Salvador, jumping on the express train with freedom. More and more countries are going to follow them. Eventually, it's going to go for the king, which is the United States dollar. And it will do because the US has a runaway debt problem, and there's only one asset in the world that can bail them out, and that's Bitcoin. The US debt's currently 35, it's going to be 50 trillion before the end of the decade. What asset in the world is going to monetize that debt, as in like free it up and make it liquid? There's only one. It's not the US GDP. It's not AI because AI is distributed. It's not gold because gold's done for. It's nothing. There's only one asset that's Bitcoin. So incidentally, the same asset that is going to threaten the US dollar will basically save the United States.
Yeah.
Bitcoin.
Yeah, I really like that thesis. And I think the thing that's probably changed from when we all got back into Bitcoin and saw this big potential to now, and that the targets keep changing, is because of that global debt and that money printing, and just every 6 months it seems there's another $1 trillion spending bill or something. People are getting unhealthier. Healthcare is going up. There's just no end in sight mathematically. So when you hear $1 million or $100 million or quadrillion dollar, I think the important thing for people at home to realize is that's just the value of that currency, and it's not just the little countries that were going hyperinflating, and eventually it's coming to a country near you. So I think that's an awesome place to probably wrap up. JP, any final thoughts for people at home? I'll put all the links to follow you down below in the description, and ThorChain and everything.
Right. So a really important movement is underway, and that's the movement of accelerationism. So effective acceleration is a counter movement to EA, so effective altruism. SBF, Sam Bankman-Fried, was a big proponent of EA, and EA is basically wrapped up socialism. And it kind of came into its own about 2 years ago when ChatGPT was released, and there was a whole bunch of optimism about the future of AI. And these doomers absolutely rolled up on the scene, and they wanted to decelerate, slow down the progress of AI, because And the motives were clear. By slowing down the progress of AI and centralizing it around the hands of the few, they would be able to control it. And that's very dangerous because a single group of people being able to control a system which can produce infinite amount of content to zombify the minds of 90% of the minds of humanity is extremely dangerous. And essentially, in the next 5 years, you better jump on your phone or your Apple Vision Pro, and you won't even need to prompt it. It will just deliver to you an infinite stream of garbage content that is like monitoring heart rate, your eye movements, and whatever, your vital signs. And just, it won't be just be infinite doom scrolling. It will just be like 16 hours a day delivering to you exactly the content that it thinks your brain needs to see to just completely turn you into a zombie. And at that point, you're just really sucking a straw of sugar from a socially funded welfare program, and your entire, entity vote for governance reasons is going to be completely controlled by whoever's controlling this infinite content machine to just basically keep them in control. Yes. And that is going to threaten humanity because 90% of the world's biological brains are going to be turned into zombies and not actually doing any meaningful creation, meaningful thinking. And then humanity's just going to implode in on itself. We'll have, no one's going to be having babies. No one's going to be actually becoming more smarter. It's just going to be the small group of people, the elite, controlling 90% of humanity. And the whole thing is just like your kids and your kids' kids' livelihoods are at stake right now. Mm-hmm. So that is the D cells. The D cells want to decelerate to control out of their own fear, whereas the A cells, the accelerationists, believe we should accelerate and we should, just forget about all the nonsense, the dooming nonsense of control and fear. Just be optimistic, build hardcore solutions to the problems facing humanity. By the way, every problem facing humanity, both real and imagined, can be solved with just hardcore engineering and just intelligence, as we have done for billions of years. The universe has tried every single can to stop us existing, and we wake up every day and we solve the problems and we exist, and that's happened for billions of years. So where's it going to happen for the next billion of years? We're going to upload our memetic repositories to the silicon-based machines and instruct them to do two things: one, look after us; but two, explore the universe and continue to spread our intelligence in the universe. So the A cells are the optimistic bunch that want to actually get stuff done, and we're currently being held back by the D cells, the doomers. So it's imperative we get them out of the system and we basically take over, and we will, because we're the optimistic bunch who actually get shit done, and we're in a war against the D cells. So that's the A cell move. I really encourage everyone to just jump on, start Googling it, and start wrapping out, because it actually provides an answer to almost everything. It provides a bit of optimism, a bit of hope for the future, but you've got to be action oriented. You've got to actually tell yourself, no, I'm going to start accelerating. I'm actually going to wake up and solve hardcore problems, use my brain, be creative, and get going, and kick out those D cells.
Yeah, 100%, mate. Escape the matrix. Free your mind. All that good stuff. I completely agree with it. I really love that thesis. So that's an amazing place to finish. Thanks so much for coming on today, and we'll check in again in future. So I hope you guys have enjoyed that one at home. Cheers, JP.
No worries. See you, Alex.